Hello and welcome back to Chart Wrap by True Options Masters. I'm your managing editor, Mike Merson, bringing you the top chart story of the week. Now, if you're not already reading True Options Masters, I don't really know what to tell you anymore. It is the greatest options trading newsletter in the world, bringing you free options insights. Yes, that means trade recommendations 7 days a week from the top experts in the field of options trading. We have Michael Carr, CMT, Chad Shoup, also a CMT, and Amber Hessla, Mike Carr's protege, bringing you their best ideas every single day of the week, 11 a.m. in your inbox. Go sign up. You can find a link in the description below. Quit dilly-dallying. It's the best options trading newsletter in the world. I should know. I edit it. Today, we're talking Netflix, though. Netflix dumped hardcore this week, all right? As much as 40% in a single day. That equates to about $35 billion in market cap wiped out. Bill Ackman lost $400 million off the position he took just a few months ago. Okay, this is a big, big, big deal. And people are looking at Netflix like it might be the next Blockbuster. Ironic, considering Netflix killed Blockbuster, a childhood favorite of mine, about 20 years ago. That might very well be the case. I don't know if Netflix is going to go the way of Blockbuster anytime soon, but it's certainly possible. However, in the short term, I think Netflix is set to rip higher, and I'm going to show you why on this chart. So let's just dial into what happened here, okay? Netflix trading at about $349 a share. Earnings report comes out. Beat on earnings, by the way. Had a surprise to the upside of about 21.65%. Definitely had a downside surprise on the revenue, but the headline item was that it is losing subscribers. This comes as the competition is heating up. Hulu, Disney Plus, which are both owned by Disney, and then we also have Amazon Prime and HBO Max. Probably the biggest streaming platforms out there right now. We're not thinking about stuff like Quibi or Tubi or whatever these other nonsense ones are. These are the kings. They're all growing subscribers while Netflix is losing them. And that is no bueno for Netflix. But this feels overdone to me. I know Netflix is expecting to lose more subscribers in the future, and they lost some this past quarter. But I don't know if that's worth $35 billion in market cap value. Maybe it is. Maybe I'm naive. But what I see in this chart is a stock that's ready to bounce and probably take everybody by surprise. What do we see? As always, we have positive divergence on the momentum indicators, with the MACD, the RSI, already crossing back above its 9-day moving average, which I like to use on the RSI. Give me a little bit better signals. And then the MACD also making a bullish cross while rallying as the price continues to fall with a generally weak market environment. Okay? This thing is going to pop hard next week if the broad market can recover. And that is a big if. This is a major time of volatility we're facing right now. But if you see the SPOOs start to pop, which we haven't in quite a while, I think we can safely bet on Netflix. Apologies, let me pull that back up. It's not on my watch list. I think we can see Netflix probably recover maybe half of this rally. We can look at the Fibonacci's retracement level. So let's go to the bottom of this smackdown and see. Or excuse me, I'm probably doing that backwards. Okay, so this is how far it's fallen. I think we could see Netflix probably rally all the way back up to this green zone. This would be at 264.24. Now, I do think this is going to happen in the short term. Netflix may have just begun a long-term downtrend along with the stock market. But I think it's entirely possible we see a huge rally out of Netflix just because it's so far extended below its moving average stack. So I like to track the 200-day in green. That's the 200-day simple. The 50 simple, The 9, which is in pink here, and the 20, these are both exponential moving averages. These are a little bit more weighted towards more recent data. This thing has not traded this far below its 200-day in quite some time. I mean, we can bring this out to a daily chart, and you can see we can go all the way back to the pandemic. Right here, we can go back to 2019. It has never traded this far below its 200-day moving average in the past few years. I think you'd be hard-pressed to find another moment in the last 10 years. But this is a situation we're facing. Let's go back to the hourly chart. I think you want to be buying call options on Netflix at the money to minimize the risk, and there is a lot of volatility in these options right now, so you're going to be paying a hefty premium. But I think it could really pay off if you want to buy call options on Netflix. If you want to get cute with the strike price, you could probably go up to 260, 270. And I think if we see a rally next week, you're going to be really, really happy you did that. But it's not all I want to talk about this week. This is also a chart of Netflix, but it's a chart of Netflix priced in Bitcoin. Now, why would we look at a chart of Netflix like this? Well, there's an interesting dynamic at play with the US dollar and the stock market. And what I mean by that is if you compare SPY to the M2 money stock, I think this might work, you can see that the stock market hasn't made a new high since 2000 if you price it in dollars. So what does that mean? Does it mean that Netflix maybe actually wasn't worth over $300 a share? I mean, it was nominally, but in terms of valuation, it's right up there with the peak in 2007, where we're looking at the S&P 500 beer, but we just made a new high from the 2007 peak before the financial crisis if we price it in M2, which is the supply of money. Compare that to Bitcoin. And the S&P 500 has done nothing but go down for the past 10 years since Bitcoin was around. I mean, this is a little bit after Bitcoin was around. It came around in 2009, but this is when it started tracking on, I think we're using Bitstamp data here. So what does that tell us? Well, the stock market has gone up over time. It's made new highs. But the rapidly depreciating value of the dollar has not been kind to returns over the past 10 years. Yet, Bitcoin is clearly winning against the stock market over that same time. We have a money, if you will, that's gaining purchasing power, and thus is showing that the stock market has only gone down in Bitcoin terms since it's been around. I'm a big Bitcoin bull, I'm a big crypto bull. I don't want to make this all about crypto, but I do think this is an interesting way to look at equities, markets, and we see a very similar picture with Netflix, especially this week. That's a real bad downturn. So, what have we learned? Netflix probably set for a bounce if the broad stock market can recover here. But also, let's be mindful of how we're evaluating stock performance, because if the currency it's priced in is rapidly losing value, you might not actually be winning as much as you feel like you are. To close out, let's just look at Netflix by M2. Netflix is making new highs compared to the money supply, so it's actually outperforming the S&P 500. Probably not a big surprise there, but I do think these are interesting tools to measure equities by, and something we need to be mindful of. So mindful that we can speak our words correctly. That's going to wrap it up for Chart Wrap. Thank you, as always, for watching, and thank you for subscribing to True Options Masters if you are a subscriber. If you're not, description below. Change that right now. Subscribe to this channel while you're at it. Hit that notification bell. Give us a like. Give us a comment. We love all of your feedback, and we love that you're a viewer, and we appreciate you so much, and we hope you have the greatest weekend, and you're ready to trade this crazy volatile market up with us on Monday. We'll see you then.